Welcome to today's episode of the Stock Market Pulse free video, where we combine a unique three-pronged approach of macro analysis, fundamental analysis, and technical analysis to help you take advantage of short-term trends in the market. My name is Eric, and today's video is for Tuesday, August 2nd, 2016. And if you haven't done so already, be sure to sign up for free trade alerts at stockoptionassassin.com. You'll see it right on the homepage. Put your name and email in there and hit go, and you will be alerted of our next trade setup. So let's jump into the a little macro analysis. We were, here at Stock Market Pulse TV, we like to look at some of the major indexes, and I want to focus on the S&P right now. And over the weekend, for our premium subscribers, I posted a snippet about the DMI Extreme Oscillator in the S&P, and I want to focus in on that because it's starting to sort of play out. And what I posted on Saturday over the weekend was that this DMI Stochastic Extreme really is a fast-moving sort of oscillator. You can see it kind of goes oversold, overbought, oversold, overbought, and we typically don't take signals strictly on that. We want to see where if we're oversold, then yeah, maybe we get an oversold on the DMI up here. But what I sort of noticed this weekend was that the last oscillation during this giant quote-unquote bull flag that we're seeing, that the oscillator was unable to get past the 50% line, and it ended up sort of rolling back down, and then it started to come back up again. And this is a negative sign for the bulls. The reason why this happens is you got to think the bulls were unable to push this thing back up, and now this is a very easy thing to do for the bulls. Even back here when we were selling off, the bulls were able to push it back up, and we're trading near these all-time highs. And so what we alerted the subscribers over the weekend was to be careful with your stocks. We're looking at things like gold and stuff, but I just wanted to point that out, that this is starting to play out. We got a tick down today, and the market's kind of starting to sell off here. So we'll see how far the market can actually go. But just to show you sort of the last couple of times this happened, you can see here's another example where it was a very bullish market. It pulled back, and then it failed, came back to here, and then that ended up being a 2 or 3 week sort of pullback stagnation. And that's kind of what I'm expecting, and that's kind of what's going on in the headlines too. I'm expecting this pullback, probably get into the this area. We'll call it 2112. This is approximately 2120 on the SPX. But for us to pull back here wouldn't kill the bull rally. It's just sort of, with the weakness that I'm seeing here in the technicals, this is something to keep an eye out on. So the other thing that's sort of going on that's, guiding markets is the Japanese yen. Their stimulus, they're trying to do more stimulus, but the yen is starting to surge here. And this is typically a headwind for stocks. And what we've been talking about on the premium side is this correlation between FXY, which is a proxy for the Japanese yen, it's an ETF, and GLD. And you can notice the similarities where we had the rally, the pullback, and now gold starting to go higher. So we're focused on finding undervalued gold stocks, and that's where the fundamental analysis comes in, because gold's starting to push these highs, and could easily break out. And I've been saying for a couple of weeks now that gold tends to follow the yen. So I know you see these stories about Japan and what they're doing, and it does affect our markets, and it can be a headwind. Not to mention oil continues to just be in a severe back in a downtrend. So this is negative for stocks as well. So the way we're playing the gold rally here is a gold stock we've been in and out of called DRD, and it's very undervalued, and we're going to look at that in a minute. But you can see it's had this huge run, really since we had an entry here. We traded this back here from $5 up to about $7, $7-8, and then we got out, and then we missed this last little top. But it has pulled back. It did a 50% retracement, and it's sort of touching this previous high here. If it can clear 903, there's a 70% chance that it gets to about $10. So that's what we're counting on. We entered on Friday of last week. So we're up a little bit in the trade, but my focus on this trade is to keep an eye on the Japanese yen, and we want gold to be heading higher as well. So the reason why we chose DRD over some other gold stocks was because of this. And let me bring this up. This is ABX Gold. This is Barrick, and this is a tool that I use where what you're seeing on the chart here is the price chart of ABX, and this green line is a projected value line of what the stock should be worth over the next couple years. And this is, always a fundamental analysis, always a sort of funny thing. But the stock does have rising earnings, and you can see it is rising, but it is overvalued compared to what the earnings are. So what we prefer to get in a name like DRD, where we have rising earnings. This is the earnings per share, EPS, and we have rising earnings per share. We'll go to 6 months, and it's an undervalued stock. So this to me is a better play. This is why it went from $5 or $6 up to $9 already, which is about a I don't know, 60-80% gain, whereas other stocks were only getting 10-20% gain. So we like DRD. We are in that one, and we'll be sending trade updates for that as well as so many other trades. So again, if you haven't signed up for our free trades to get into stocks like DRD, go to the website at stockoptionsassassin.com, fill out the box, and we'll see you at the next update.